Hi, and welcome to BizTech's Inside Trading Show. This show is all about trading. Every week, we will discuss what trading is all about and what are the required habits in order for you to become a successful trader. We will also share trading ideas and themes, and it's all about helping you make money. Now, with me today, as always, is my co host, Pan Vilun. He's the founder and CIO of Track Record Trading Academy. But joining us today as well is Nicholas Koh, partner and CIO of Dune Asset Management. Gentlemen, welcome to the show.
Hey,
Hi,
Brian, it's
Brian.
good to be here. Let's talk about trading.
Now, speaking of trading, we always start with a quote, and today's quote is from Jesse Livermore.
He says, there is the plain fool who does the wrong thing at all times, everywhere. And then there is the Wall Street fool who thinks he must trade all the time. It just means that trading, as in investing as well, it's not about frequency of activity, right? Do not mistake activity for productivity in trading. It's not like a day job where you have to do something every day and then get paid a steady wage. And that's a misconception of most people who watch trading videos online, right? Because they think, oh, I did number of trades today, I did number of trades every week. They think in terms of trade, but the purpose of trading is not to trade, right? The purpose of trading is to make money. So you only trade when absolutely necessary, and so the trades that we tend to be involved in are extremely long term, and that's why we have Nick here, who's going to tell us more about one of his favorite trades, which has been doing well and he believes will continue to do well. And so that's the quote for the day.
Now, and the key theme for this week's show is really around the energy sector. And we've had a lot of activity in the energy sector over the last few months. That's why we've brought Nick in as the domain expert as well. V, tell us a little bit more.
Okay, so oil prices have been basically not doing much for the past year or so. It's been trending lower, and the lower prices have been met with repeated OPEC plus production cuts. But recently, it's been starting to show some interesting upside potential. Right, we are trying to break above the 85 level. Not since April, we've seen these levels, and part of the reason is there's two parts to the equation of any price of an asset or commodity, right? That's the demand and the supply. On the supply side, we all know this, that of course the world has become accustomed to sanctions on Russia, so that part is not going to cause price shocks for now. But we have seen that the commitment of OPEC Plus, which is essentially driven by Saudi and also Russia, the commitment for to keep prices supported at these levels are strong, right? They've been very committed to uh, production cuts, and this is
And
a
V, I want to interrupt you here because if you look historically, even back to the 70s, OPEC or in this case OPEC Plus has never shown the sort of consistency and discipline that they have been showing in the last
yes.
few years.
Yes. It's a good thing you mentioned this, because they had production cuts in the past, but production cuts are just guidelines for them to cheat on the production cuts, right? But as you said, they have never shown this kind of discipline and consistency, and I guess also loyalty to the pledge to keep to the quotas, right? We have seen Saudi uh, unilaterally taking the leadership in cutting production as well. So that is a rare sign. I think it's because of the leadership of MBS, right? That I think that alone is also another favorite theme of Nick and myself about the rise of Saudi Arabia in the years to come. But on this note, on OPEC Plus, the commitment is unprecedented. The discipline is also unprecedented. So on the supply side, I think we are quite clear on this, right? Downward drifts in prices will be met with production cuts. But I think what has changed also recently is that the commitment of the Chinese government to boost their own economy. part of the reasons why the demand has been dropping is because of the flagging growth in China and a disappointing reopening growth, right? When they reopened from the COVID lockdowns, the world expected China to boom, but we didn't really see that. So, in the recent Politburo meeting of the Chinese government, Chinese Communist Party, they said that they took out a very interesting statement in their many page statements where uh, real estate is for living in, right? So
Mhm.
previously they were clamping down on speculation. They were part of the reason of the tepid growth in China was because of their common prosperity policies. They were clamping down on dominant industries like tech, speculative industries like real estate. I think that is something of the past. The resolve now is to boost economic growth and address the high youth unemployment rates. So we are likely to see even more policies being implemented. Like the latest is they are trying to boost tourism in China within China. That should boost fuel demand and also cause upward drift in oil prices, right? So I believe now we are also in the stage where monetary authorities around the world are starting to realize that maybe they have done enough in hiking interest rates. They're starting to be more concerned about economic growth than inflation. So I think we are seeing a shift in that posture, in that stance. It's likely that we will see oil continue to drift higher in the weeks ahead.
Okay, then for us as investors, how do we take advantage of this knowledge? Now, you've just shared with us the key broad themes around energy, the demand side, the supply side. So, how do we play the game? How do we make money?
Yeah, so essentially, of course, you can just trade oil futures or whatever it is, or buy some oil companies. But we believe that we do have a better expression of the trade, and it is this stock called Transocean Limited, and it is one of the favorite stocks that Nick got me into. So, Nick, maybe you can tell us more why this and why even further.
Yeah, so I think Transocean Limited, it's a non-consensus expression of the high oil prices at this point in time. So I think what V and I tend to like is to get into trades that are just turning at an inflection point. I think that's where you get the most asymmetric kind of returns from your investments, right? Where no one is looking at it, you get in at a low price, and then the stock explodes, and that's where we are going for Transocean. So our average price we got in was about 350. Now it's trading almost 10, but our target price is a lot higher. We think that Transocean is going to go to about 80 dollars, which is
Okay,
close to the
why
previous.
is that? That's a huge upside. So, you've bought in at $3 plus dollar cost average. It is now 8 plus going up to 10, but you're seeing a further upside of up to 80. What are the drivers for this?
Right. So we are very, very early in the offshore cycle, as I've mentioned. So we are at an inflection point right now where a lot of energy companies, they're realizing that offshore oil prices, break evens, makes a lot more sense than drilling onshore, right? So in the previous cycle, if you can imagine, the break even prices for drilling offshore was about $80 per barrel. And that is around where Brent is trading right now, right? But
Mhm.
since the advancement of technology in offshore drilling, break-even prices has come down to $50, and that is a huge drop in break-even prices.
And that's quite interesting because then offshore oil is basically from a per barrel basis cost competitive with shale oil.
That's right. So the investment cycle makes a lot more sense, right, for um, drillers or energy explorers to go offshore, because for onshore cycles, you have to spend a decent amount of capex to drill, and your lifespan of the well is only about 1 to 2 years, and that is a very short lifespan. That means every 2 years or 3 years you're going to need to drill new shale formations, right? For offshore, you just need to spend a one-time capex, and the oil well can last you 10 to 20 years, and that's why we are seeing a huge resurgence of explorations offshore. If you look at Guyana, apparently it's the
Mhm.
fastest growing GDP country in 2023, and that is because of their recent new offshore exploration that they have done. Right, ExxonMobil is there, Hess is there. they're all drilling offshore. And because they have found a huge oil well in Guyana, the GDP has exploded, right? And I think offshore activity is exploding. So if you look at Transocean, if you look at the order book, they're booked out to 2024, 2025. Has not been seen since the last cycle, which is back in about 2003. We are seeing the same activity in the order book as we have seen then. And
And Nick,
that's
I
when,
want to stop you here because one of the key things, and this is for the audience and anyone who's watching it who's not familiar with the oil market, one of the key constraints in terms of offshore drilling is the number of rigs there are in the market. You can't just go and build a rig in 6 months. It takes years and years and years to build one, but there are also drivers that now make it very difficult to even build new rigs. Am I right, Nick?
right, that's a very good question, right? So Transocean has a huge moat in that sense, right? Because of your global supply chain disruption, that's one thing. Material cost has increased by a lot. And thirdly, shipyards have been scarred by the previous cycle where a lot of offshore companies went bankrupt. So no shipyard is going to take the risk of building a new offshore vehicle, ship for these companies. That's one. Shipyards are full. The second thing is material costs have increased tremendously. To build an offshore rig costs about 3 times more now. Replacement cost for about one rig is about $1 billion, and that is a huge difference from previous time when it only cost about 500 to 600 million to build a rig. And thirdly, capital cost. If let's say in the best case scenario where a shipyard agrees to build your rig, your paid up capital upfront, your deposit is going to be substantially higher as compared to previous cycle, right? So there are no new rigs coming online for the foreseeable future, at least the next 5 years. And that is what caused day rates, which means the rate to rent a rig per day to skyrocket, right? So to give you some context, in the lows of the cycle, which is about 2015, that era, your day rates is about $80,000 to $100,000 a day to rent a rig.
Okay.
Now, day rates are hitting $500,000 a day, right? That is the amount of
Wow.
massive free cash flow that is coming to these companies and Transocean, right? And they have a backlog booked out to 2025. So,
Okay, surely,
trans
but one of the things you can do is the following. When the cycle turned, many of these rigs had to be put in storage.
right.
They were stored somewhere else. And I don't know the technical term for that, but they've been stored. Is there a way to then redeploy that to take advantage of these rising rig prices, and therefore that may be perhaps a cap on the upside of the charter rates per day?
Right, yeah. So Transocean has a huge amount of rigs that are being stored. So the technical term is called cold stacking. They've been cold
Okay.
stacked. And because of the huge demand that is incoming, a lot of these rigs are now being decommissioned, right? So decommissioning is also another narrative that is going to re-rate Transocean because no one is looking at offshore, right? But when people start digging into the numbers and looking at the number of rigs that Transocean is going to decommission and the massive free cash flow from all these rigs combined, that's where we see the huge talk that can take Transocean from $8 to about $80 to $100, right? So, in comparison, in 2006, 2008, when the super cycle was at the peak, day rates was about 400,000 to 450,000. The day
Okay, so
rates
we are above that already.
are already above that. Yeah. And no one is looking at offshore yet. But the major oil companies, even China, which is the biggest company, is I think one of the state-owned company, right? They are now renting or booking Transocean rigs to explore offshore off the coast of China and in Guyana, right? So we are very early in the super cycle, and I think this V and I, even at this price, we are constantly accumulating shares on pullbacks.
Now,
So
you are not outliers in terms of betting on the oil business. The famed Oracle of Omaha, Warren Buffett, has also done that with Occidental. But can you maybe either of you give us some insights into why did Warren Buffett make that play? What's interesting about Occidental?
Right.
Nick,
So
yeah, let's go.
yeah. So Buffett is operating on another level, right? Berkshire Hathaway has a huge war chest.
Yeah.
Um, so he's technically limited to certain companies that he can bet on because no company can absorb his huge inflow of cash, right? So Buffett also had a famous saying that if he had been running a much smaller shop, his investments would have been very different, right? Because he knows how to find value. But in Buffett's case, I can kind of understand why he bought into Occidental. Firstly, because the market capitalization of Occidental was big enough to absorb his investment size. Secondly, is Buffett bought Occidental at a very interesting time when they were just coming out from restructuring bankruptcy and restructuring some of their corporate debt, right? That is because Buffett kind of understands investing at inflection points as well. Since Occidental restructured, their stock price have outperformed almost most of the other oil majors if you actually look and compare in comparison. And I think that is why Buffett chose Occidental because of the restructuring of the debt, investing at inflection points, and it is big enough to absorb his investment size.
Now,
Right.
gentlemen, before we leave, then, any final thoughts you'd like to leave the audience with as we end this special show on investing in the energy sector?
Yeah, so I think circle back to the Jesse Livermore quote, right, where trading is not about the frequency of trading. So when we say something like this, right, rig Transocean, it's the business model is pretty simple, right, and it is benefiting from the cycle of persistently high oil prices, and we are seeing exploration rights being granted even in the UK right now, right. So we are seeing beginning stages of the next phase of what to do when oil price stays high. And I think some people will be like asking us, like, why do you tell us about this when it's $8 and it was three something before? That's because they didn't watch us on our other streams, right? Like, so this is where it's important to keep track of Track Record Trading Academy, right? So it's a plug here, but it's all documented. We are not making this up. It's been our long-term trade, and it highlights one thing, right? The trading success is not about being very active, right? You just have to have a few trades like this, and then and persistently over time it compounds, right? Your wealth grows, and you can find a stock like this once every cycle where you can ride it from below 10 to 8x, and it's pretty good, right? It's pretty good for your retirement at some point. And we are I think even the $80 target is quite modest, right? We are seeing uh, day rates at higher levels than previous highs, and the stock prices is, if you look at the short-term chart, it looks like it's the highest level since 2020. Why didn't you tell us earlier? I think 5 years from now you look back to this, it's like, well, it's great we watched this episode because he told us right at the time when it's going higher. Of course, there's a possibility we could be wrong, but if you're wrong, it's limited downside, right? It's, you know exactly where you're wrong, but the upside is unlimited. So this circles back to one of the keywords that Nick said about his trading is we are looking for asymmetry, right? Meaning we are risking a limited amount where we know when we are wrong versus unlimited upside, right? It's essentially unlimited upside to the who knows what happens next, right? So I think that's on that note. I that's my final word. Anything from you, Nick?
No, I think you summed it up pretty well.
Okay, cool.
That, gentlemen, thank you very much for taking your time to come on the show.
Thank you.
Cheers.
Now, that's it for this week's Inside Trading Show. We've been speaking to Pan Wee Lung, founder and CIO of Track Record Trading Academy, and Nicholas Koh, partner and CIO of Dune Asset Management. This has been BizTech's Inside Trading Show. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.